All right, good afternoon. We still have a few folks joining, but we're going to get started anyway. This month's webinar, which we usually don't do a December webinar, so we're filling in here. We're going to talk about implementation for Maine paid family medical leave. So back in September, we had a great webinar with Luke and Reggie from the state on really the details of the program, kind of how the law was written mostly. Today, we're going to talk about implementation and what's going to happen the next 60 days or so and through the first quarter, and what we need from you to ensure that this is a success for you and your business to get going. So today's agenda, we're going to talk about the program. We're going to go back, talk about a few of the details. One of the tricky things, the state just released the final rules last week on this program. So fortunately, there weren't a lot of changes from the most recent draft, but we now know specifically how things are going to roll out, what the final rules are, how the program is going to work, and so forth. So we are happy to be able to present all of that to you today. The big question is the employee count. So if you have been paying attention, employers with 15 or more employees must pay an employer contribution into this program. That count is a little bit tricky, so we're going to talk about that. What employers need to know, what you need to do now, and what you need to do in January, and then what we're going to do to help you stay in compliance and manage this moving forward. So jumping right in. So paid family leave passed the last 2 years ago, two legislative sessions ago, essentially following the lead of a lot of states across the country. And we are now getting ready to launch that program. So the state's been working the last 18 months or so to get this stood up. It has definitely been a race for them. They've been rushing feverishly to get this done, so much so that, again, we didn't have final rules until just last week, and the program is supposed to start in January. So essentially what this program will do is provide up to 12 weeks of paid leave per year for family, military, medical, or safe leave. So this is very similar to a short-term disability policy. It's a bit more rich than a standard short-term disability policy. We've also been kind of describing this as very similar to unemployment, right? So a lot of the same rules apply to this that apply to unemployment in terms of eligibility and so forth. So uh, that's very similar kind of state program. This program does apply to all employers in Maine with employees earning wages in Maine or non-Maine employers who have employees working in Maine. So basically, if you have working employees working in Maine, you are subject to this law. Very similar to unemployment, right? And regardless of your size, regardless of seasonality, that's a lot of folks have said, I'm too small. I'm a seasonal business. No, 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 you are still subject to this program. The only carve out in the law is for government entities and some particularly union type entities, employers with unions. There's some carve outs for those folks that have collective bargaining agreements and so forth. So essentially, everybody on this call, regardless of the size of your business, if you are paying any number of employees in the state of Maine, you are subject to this program. Okay. Lots of folks have been asking questions about, am I required to do this? Am I not required to do this? If you have employees working in Maine, you are required to participate. Okay. So a couple of hands go up, a couple of questions. The question and answer is open. The chat's open. You can pop those in there as well. And if I see them, I will definitely get to those, or we'll get to them in the end for questions. So kind of talking about the details. Payroll withholdings will begin January 1st, 2025. This is something that you must start withholding contributions from your employees on January 1st, 2025. If you have the employer match, if you're under that requirement, which we're going to talk about in a second, you also have to start, setting that aside as well. Employees cannot really start applying for these benefits until May of 2026. So the employees are going to start paying in now, but we have about 16 months before you're going to be able to start collecting these benefits. And that is basically the state can fill up the fund and make sure it remains solvent. The program does cover all earnings in Maine, right? So full-time, part-time, seasonal, per diem, everybody, the same definition of wages that applies to unemployment in this situation and many other laws is exactly what the wages are based upon. They are required to make their employee contribution. Self-employed individuals, so when we talk about self-employed people, this is truly sole proprietors, okay? folks that say, hey, I own an S corp. If you own an S corp, if you're a single member S corp, you are required to come in there. Okay. Um, Really, this is designed for kind of those true, really small entities. Okay. And that is an optional. If you are self-employed, if you're an artist or whatever you might do, if you're sole proprietorship, you can elect, do not have to participate. If you are a single member S corp, for example, small business incorporated as an S corp, you do have to apply for this. So yes. Payroll contributions. So if you have 15 or more employees, and again, we're going to talk about that count in just a second, the contribution amount is 1% of the total wages. 0.5% can be paid from employees, and 0.5% must be paid by employers. If you have less than that 15 employee threshold, it's 0.5%, and that is to be paid 100% by the employee contribution. Now, here's the kicker. The employer can choose to pay the employee portion of that contribution, but they're not required to. So if you have regardless of the number of employees you have, if you want to cover that 0.5% premium, you can do that, and the employee will not have any tax taken out from there. Lots of details. We've kind of gone into the real nitty-gritty on our last webinar, so I'm not going to go into that so much, but a copy of that last webinar is recorded and saved. You go to papertrails.com/PFML. There's a lot of details in that webinar and in our guide to this program about the nitty-gritty details. So this is just a really high-level overview, but if you want the true details, head over there for sure. Let's talk about that count. So 15 or more employees. The definition of that count and how you come up with that is, did you pay 15 or more employees in any 20-week period, 20 or more week period in the year? Now, the rules specifically state you have to do this count once per year. Essentially, on October 1st of every year, you go back and look October 1st to September 30th. If you paid 15 or more employees in any 20 weeks in that 12-month period, you are considered to have 15 or more employees, and you must pay the employer contribution. Okay, that 0.5% employer portion. So this count is pretty complex. It takes a little brain work. We've done some reporting within the system. So if you would like, if you think you're on the cusp of that, and this is Maine employees only, right? So if you have employees who are in other states, those employees don't count. It's only Maine employees, all right? And that's kind of the way that count happens. And then every year, if you think you're on that cusp, you want to go run that every October 1st for the prior October 1st to September 30th period, and go see exactly if you qualify every year. Some states have different ways of counting this employer-employee count. In Maine, this is the way it is. 15 or more employees paid in any 20 weeks of the 12-month period, okay? And that happens once per year. So if that drops down if you've counted for, again, we're going to start for 2025 benefit year, when we've gone back and we run this report for October 1st, 23 to September 30th, 2024, you are locked into that for that full next year. You cannot recount and recalculate until October 2025 for the 2026 payroll year, okay? So it is a full year calculation based on the previous 12-month period. We've had a lot of questions about private plans. So there is a provision within the law that will allow for private plans. I will tell you right now, even if you intend to, at some point, look at a private plan option, you must still register this quarter and make contributions now for this quarter and potentially even longer. You are allowed to go out and buy a private plan. Many businesses have a short-term disability plan today, and those plans need to be adjusted in order to meet the state's minimum requirements. So the state's plan is a lot richer than a lot of traditional short-term disability plans. So all of the providers are still kind of creating those plans and what they're going to look like, pricing, et cetera. I would encourage you to talk to your benefits brokers over the next few weeks to start having those conversations. To my knowledge, the benefits brokers that I've spoken to still are saying, because the rules were just finalized by the state, these insurance companies are not yet publishing rates or plans that will meet this substitution option. Okay. So work with your agent, but the state, again, they want to fill their coffers. So you have to apply, and you and your employees will have to continue to make contributions at the very least for first quarter. Okay. The portal to allow for the plans to be submitted and approved will only be available starting April 1st, 2025. You will have to apply for that. Okay. And the state's going to have to review it and approve it. Those approvals, as long as you keep your plan in good standing, are good for 3 years. Regardless of whether or not you go into a private plan, however, you must still report your wages to the state each quarter. It'll be a zero rate, but the wages still need to be submitted every single quarter. Okay, no taxes due, but the wages still need to be reported each quarter, even if you get an approval for a private plan. I will say, based on the conversations I've had with benefits brokers and insurance companies, the private plan options are going to be expensive because it's a richer plan than what people are paying today. And I think a lot of people have said, we're going to just do a private plan, and they haven't really vetted out what that looks like. I think in a lot of cases, it might make sense if you're a Walmart or an LL Bean or something like that. I think for the majority of the folks on this call, it may not make as much sense as some people think it will. Please have those conversations with your benefit brokers sooner than later so you can start thinking about that. But again, until your plan is approved, you still have to make contributions to PFML. Okay. The state website has a lot of information on it as well, maine.gov/paid leave. They have a lot of information on these private plans and really all the rules surrounding this going on. So what do employers need to do today? We've been getting this question a lot, and we just sent out information last week on this. Our plans of how we're going to handle this for our clients. Basically, we have to figure out what you want to do, how you want to manage this program for you and your employees, so that we can start withholding payroll contributions on January, with every payroll run after January 1st. Okay, every payday after January 1st has to have this taken into account. So we have to work on that. We've got kind of 3 steps that we've kind of broken this down to. The first thing we need you to do, if you have not already done this, please go to papertrails.com/paid leave form. This survey asks 2 simple questions. Are you required to make the employer contribution? That is, do you have 15 or more employees? And if you need help coming up with that calculation, please reach out to your processor. We have the ability to run that calculation for you, right? So do you need to make the employer contribution first and foremost? And second of all, do you want to cover your employees' contributions? So instead of them paying 0.5%, you're going to cover their 0.5%. Okay. What do you want to do? If you are a client of ours and you do not fill out this form, we are going to set you up based on our best guess of whether or not you have 15 or more employees. We'll do that calculation, and we will set it up standard so the employee is going to be making their contribution, and if applicable, the employer will make their contribution. So we will use the default setup if you do not fill out this form. Okay. And we will be doing this starting Friday. We're starting to go through and set these up for our clients because we need to have these ready. Every payroll that has a pay date after January 1st needs to have this factored into it. Okay. That's step 1. Fill out this form. 2 simple questions. Let us know how you want us to set this up, please. This is due by Friday so that we can start getting these set up for January 1 paydays. And again, if you do not fill this out, we will set you up with the standard settings. Step 2, every payday after January 1st is going to have this factored into it. Okay. We must start pulling employee contributions and, if applicable, employer contributions with every payday after January 1st. Okay. You again need to let your employees know about this, right? Please don't call 1-800-PAPER-TRAILS. We don't have an 800 number. Don't say that. Please do not call Paper Trails and say, what's this extra 0.5% coming out of my check? Please let your employees know. We have an employee info sheet on papertrails.com/PFML that has basic information about this program that you can provide to your employees. Okay. It's a 1-pager. You can hand it out to your employees, give it to them, send it out in a company email, whatever you want. Use that form to communicate with your employees. Let them know that this is coming so you don't get a million questions and we don't get a million questions. The state requires you to hang a new labor law poster in your workplace. Reminder, if you haven't updated your labor law posters, you might want to do that while you're doing that. There's been lots of changes. And this is just another one that needs to get added. And certainly if you go to papertrails.com/resources, we have links to those. You can get those for free. We also have a labor law poster service that we provide, which anytime something like this comes up, you'll get all the updates printed and mailed to you in nice form. So other thing you need to think about, your handbook and policies likely need to be updated. Okay. This is a new program. This is a new tax. This is a new benefit, essentially, that you are going to be providing to your employees. You need to update your handbook and your policies so that everyone knows how to use this program, what it entails, and so forth. Don, who's our HR consultant, is happy to help review your handbook, policies, all that stuff if you need help with that. Okay. The third step, and this is the question we've been getting the most, I need to register for this program with the state. And the answer is yes, you do, please. However, the portal is not open yet. We went through a webinar about 2 weeks ago now with the state. They gave us a preview of this. It is very simple to do. It's actually easier than withholding. It's easier than unemployment. It's basic employer information, business name, tax ID number, address, primary contact. They're going to ask you if you have 15 or more employees, so know the answer to that. Make sure it's consistent as what we've talked about. When this portal opens in January, we will send you instructions on how to do this. Unfortunately, we do need everybody to register themselves individually and then let us know what their account number is. Okay. The state is not allowing us to go register these on your behalf. But based on the webinar that they did a couple weeks ago, it's very simple, and we will send out step-by-step instructions. And the state has already recorded that webinar, and it's on that maine.gov/paid leave website, so you can see how simple it is to set up. Okay. We again will send out, once this portal opens up, we will send out step-by-step instructions with more information on how to do this. The state has not given us any indication on when in January this will happen. They have literally just said sometime in January when the portal goes live. That's the information we have today. Once you get registered for that, we will need that account number so that we can file the returns on your behalf and make the tax payments on your behalf. Okay. So we're going to send that out in January when that opens up. And we're asking everyone to get their account numbers to us by February 28th so that we can file your first quarter returns accurately and appropriately. I will tell you, the penalties for this program are very, very high. The penalty built into the rules is 1% of your total payroll for the quarter. If you have $100,000 worth of payroll in the first quarter and you do not file or do not pay because we do not have your account number, okay, that's $1,000 fine right there. Okay, so keep that in mind. So these are screenshots from the webinar that we were on a couple weeks ago. It is, quite frankly, it is about a 10-minute process to go through. There are step-by-step guides on the state's website. We will send out a step-by-step guide, but it's basically go in, register as a new employer, put your tax ID information in, put your business information in, put that count in there, right? Here's the question. For the time period 10/1/23 to 9/30/24, were there at least 20 weeks where you had 15 or more employees? That's the count, right? And they're going to ask you that. So you need to be ready for that when you get there. But this should take less than 10 minutes, and you should get your account number right on the spot and send that in to us. And we will have more information on how to do all that once the portal goes live in January. So what are we going to do for you, right? We're here to help you. We're still continuing to be your partner. We are treating this just like any other payroll tax that we will continue to withhold from your employees and from you, and we will remit that off to the state as appropriate, right? So we already do this for other clients, many clients in other states. Massachusetts has PFML, many other states have that. So this is just like any other tax. We will submit the wage reports to the state for you. We will remit the payments for you, and we will give all of those reporting for you to help with your count if you need it every year. But again, what we need you to do is please register and get us that account number before the end of February so we can do all of that accurately and appropriately. And remember, 1% of your total payroll for the quarter is the penalty. So the bigger you are, the more you pay in payroll, the bigger that penalty gets. And they seem to be quite ambitious with that. So they mentioned it quite a bit. So we have a lot of resources out there. Remember, if you go to papertrails.com/PFML, we have a full guide to this program. We've put together a ton of information on this, the guide, that employee information sheet, the previous webinar that we did back in September. Lots of information. Always, of course, pay attention to our social media because we're going to send a lot more information out in January, email, social media, etc. And the state has started to put a lot of information just recently in the last week or so out on maine.gov/paid leave. They have recordings of all of their webinars. They have some other guides and information about the program. And of course, those final rules are there. Before we hop into questions, I want to remind you, we do a webinar every month. It's the third Tuesday. January is going to be a fun one because we're going to talk about what's in your handbook, all the labor law updates you need to know about for 2025. And that's going to be on January 21st at 2 o'clock. If you haven't joined that, Dawn and I are going to lead that, and we'll go through some of the changes that you need to know about. This is the big one for this year, but there are many others that need to happen as well. So register for that if you haven't. So I have a bunch of questions already in here. You throw those in the chat if you'd like, and we'll kind of work through them here. So first question is there a maximum tax like with unemployment? So the wage base for this is tied to the Social Security limit. So the Social Security limit for 2025 on my handy dandy cheat card right now is $176,100. So the basically 0.5% or 1% on the first $176,100 is the maximum tax. I'm a Maine employer with out-of-state employees. This only applies to Maine employees. So if you have employees in New Hampshire or Massachusetts or anywhere else, they do not need to pay this tax, but any employees paid within the state of Maine must. Can the employer dictate the amount of time an employee can take off, or are they entitled to the 12 weeks if requested? I'm not going to get into a lot of the benefit answers. I'm not sure the state even knows the answers to all of those questions, but there's a ton of information in the rules document about how these types of things are going to be decided. And employees will have to make a request for time off. It has to be substantiated and justified. However, you as the employer cannot ask for documentation. You cannot ask for substantiation of any type from the employee. This kind of relationship is really between the state and the employee, and they make that decision. There is a possibility that you could file for an undue hardship to stop an employee from taking leave, but that's really pretty ambiguous how it's written in the rules, and the conflicts with federal FMLA and some other things really kind of are conflicted there. So there's a lot more questions than answers in terms of the benefits in there from that. But it's definitely a good question, a question that a lot of employers have. We did spend a lot of time on that in our previous webinar. There was about an hour's worth of questions that we got answers directly from Luke, who's the director of the state program, and Reggie, who's the deputy director. On our last webinar, a lot of those types of questions were answered, and you're welcome to go review that in our webinar at that papertrails.com/PFML. Does the program cover foreign employees, H-2Bs and J-1s? The answer is yes, they must pay into this. And the way the law is written today, the interpretation is that they can use that if they meet service requirements. So that is certainly a consideration as well. There are some service requirements to take the leave, but again, it's a J1. I think it might be hard for them to take that, but if they're a 12-month J1, it's possible that they could meet those service requirements. If you have an employee from Canada who works for you for 3 months in the summer, do you withhold from them? If you are running them on payroll and they are being paid in the state of Maine, yes. Does the 1% tax include tips? Yes, it does. All wages paid, including tips, 1% is calculated upon. How about an employee who works in Virginia, but the headquarters is in Maine, paid out of Maine? So this is only based on employees working in the state of Maine. Okay, so just like all payroll taxes, it is based on the work location of the employee. So your Maine employees would be included in the count, and the tax calculation. Any out-of-state employees are not included in the count or the calculation. However, if there is a state like they work in Massachusetts, they will have to pay into Massachusetts withholding, Massachusetts unemployment, Massachusetts PFML. So each state has its own taxes. This program applies to employees working in the state of Maine. If the employer chooses to pay some of the employee contribution, is that taxable to the employee? There have been a lot of questions about the taxability of these premiums. The IRS has been mute on that. However, the The general consensus and guidance from IRS is that these types of PFML programs are treated just like any other tax. So they are not deductible, they are not pre-tax to the employee. And if, like unemployment, you as an employer today pay essentially the premium to unemployment for the employee, that is not considered a taxable fringe benefit today to that employee. So right now, the general consensus with very gray information from the IRS is that this tax is treated just like any other tax in that way. So think about it just like unemployment. So short answer, if you pay the employee contribution, we do not believe that it is a taxable fringe benefit for them. I heard that you said about one-person companies, but I am a one-person LLC. I'm the owner and the only employee. If you are a single member LLC, not a corporation, single member LLC is treated the same way as a sole proprietorship. Okay. Sole proprietorship and a single member LLC are essentially the exact same thing. The only time that owner would need to be on payroll is if they were incorporated, either an LLC filing it as an S corp, or a C corp or an S corp, something like that. They would be on there. So essentially, if you're a single member LLC, however, if you are a single member LLC with employees, right, those employees would be subject to that. Do you have to pay 15 or more employees for the full 20 weeks or 15 or more employees at any time within that 20 weeks? It is 15 or more, the count is 15 or more employees for any 20 weeks in the 12-month period. So if you have a week where you have 20 employees, the next week you have 12 employees, then you have 16 employees. Every time you have 15 or more employees, that counts as a week. They do not have to be consecutive. It is 15 or more weeks, 15 or more employees paid in any 20 weeks in that 1 year or 52-week period. Okay. Question, can you send us the slides after the webinar? Yes, this is being recorded. John usually gets these posted by tomorrow morning, and he will send out a follow-up email with the slides, all the links we've talked about, and a link to the recording on YouTube. What's the web page that has more information? So we have, if you go to papertrails.com/PFML, that is our website with full resources. If you go to maine.gov/paid leave, that is the state's website with lots of information. Do the employee deductions come out of the employee weekly or quarterly? So the way the rules are written with the state is it is by default set up to come out of every payroll that the employee is being paid. There is a provision in the rules that allows you to take that deduction less frequently, but not more than quarterly, and you have to have a written agreement with each employee. Okay, so you could say we're going to only take this monthly or quarterly, for example. However, you have to have a written agreement with each employee. And of course, that's a big chunk coming out of their check, 0.5% on the last wages of the quarter. We, by default, are really not even offering that option to our clients. We are going to be deducting this every payroll. There is a rule in the state rules that says if there is an error on payroll, you cannot go back and fix that and collect that if it has been missed. So we're really trying to make sure that this does not become an employer nightmare from a payroll perspective. So we will be taking that with every payroll that's being. If you are under 15 employees, is it possible for the employer to pay 0.25 and the employee to pay 0.25? We've been asked this question by a couple of our clients, and my interpretation of the rules is that yes, you can. The state doesn't really seem to care where that 0.5% or 1% comes from, as long as they get the premium. So because you can cover the employee's portion, my interpretation of the rule says if you want to split that 0.5% up to 0.25% and 0.25%, you will need to, you can certainly do that. Let us know in that form that you're filling out for us, put that in the notes, please, so we can set that up for you. If we have less than 15 employees, we do not need to register for the portal. Is that correct? No. If you have any employees, you must register for this program, and we will send out information and instructions on how to do that. The only piece that has to do with 15 or less employees is the employer contribution piece, okay? Everyone that has one or more employees working in the state of Maine must register for this portal and must get us their account number, please. Uh, Jake from the State Chamber, thank you. Department of Labor noted today, they just announced this today, the employer portal is going to be going live January 6th, Monday, January 6th. So mark your calendars. We will mark our calendars. John, I know you're listening. Let's put that in motion so we can put notes together on that. Thanks, Jake. Oh, and another one, Luke is on here. Luke from the state, thank you. Same thing, announcing 1/6. Uh, Another question. Do I have to register each of my businesses if they have a different EIN? Yes, you do. Every EIN needs its own account number, and you must register this. I will tell you, one of the questions we have had, every other employee count that we're aware of takes into account common ownership. So if you have two businesses, one with 5 employees and one with 20 employees, that would essentially kind of combine those counts for almost every other count in the world. Think ACA, benefits, all those types of things. With this program, you must register every individual business, every individual entity, but you do not have to combine the count. So it is each business, whether or not you have 15 or more employees, dictates whether or not you have to pay that employer match. So, are there exceptions for part-time employees? Each of my employees work less than 5 hours a week. You must still register, they must still contribute. So even if they work 5 hours a week, they make 20 bucks an hour, they make $100 a week, they're going to pay 0.5% on those wages. As an owner of an S Corp, will I need to pay into the plan as an employee if my other employees are doing so? If you are an owner of an S Corp, you are on payroll, you will pay the tax just like everybody else. You will pay your 0.5%. All of your employees will pay the 0.5%. If you are treated just like an employee of that corporation and will pay the tax just like everybody else, unless the business is covering it for you. The only thing about that coverage, if you are going to cover it, you must cover that 0.5% for everybody. You cannot just say, I'm only going to cover the owner's 0.5%. You must cover it for everybody. Owners need to be included in the count too. Yes, any employees paid, including owners, should be included in the count. Another question, does the count, I'm assuming this one that looks like it got cut off. Does this include the owners that worked or just hired employees? Again, yes, all employees, including owners who are on payroll, are included in the count, and all employers included, paid on payroll, including owners, are subject to the tax. Can you speak to considerations for folks who are sole proprietors, those of us that are employee at the same time, but want to enroll voluntarily? I am not fully versed on that subject, so the sole proprietors opting into the program. My understanding is that you will be able to register as a sole proprietor, and you will have to pay 0.5% on your wages. I'm not even sure the state has fully worked out the mechanics on that yet. I would defer you if you're a sole prop and you want to opt into this program. I would encourage you to call the state or shoot an email to them. Luke and Reggie and their teams have been absolutely phenomenal. Every time we've reached out with a question, they've gotten right back to us. I'm not as familiar with those sole prop kind of questions, so I'd encourage you to reach out to them. Is maternity leave limited to a specific time frame? Again, benefit questions, I'm not as familiar with. However, I will tell you that you can use up to 12 weeks within the benefit period, and maternity leave is one of the qualifying leave reasons. So presumably you could take up to 12 weeks for maternity leave. Again, we talked about your policies, right? So if you have a policy about family leave or maternity leave or anything like that, you're going to need to adapt your policies to meet these. So think about that as well. I am the treasurer of a nonprofit with 3 employees. I assume they need to register, but will have no liability. Yes, 3 employees, you have to register. The employer, the nonprofit does not have to cover the portion. They do not have to contribute to that. They certainly can pay that 0.5%. The only quote unquote liability that this organization is going to incur is the liability that you must collect and remit these funds to the state, which we will do for you. So just like any payroll tax. Owners of the company need to have deductions as well. Yes, if they are on payroll, they must have deductions. Another thing, January 6th. Yes, wonderful. Not sure I fully understood how the self-employed works. I'm a bookkeeper, self-employed contractor, 1099. So the self-employed needs to register but not report the 1099 amounts. You do not, if you are self-employed, if you are a 1099 contractor, sole proprietor, you can register for this program. You do not have to register for this program. And again, I'm not 100% versed on how the state is going to manage uh, the self-employed individuals, the sole props. So that's something I'd encourage you to reach out to the state on. What if the employee is not expected to make 6 times the state average weekly wage for 5 quarters? Is there an exemption on the tax for those employees, or is the tax paid on all employees regardless of their wage? That 6 times the benefit, excuse me, the 6 times the state weekly average for 5 quarters, that's the eligibility number. So we didn't talk about that today. But in order to be eligible for the program or to receive benefits, you have to have worked, you have to have earned 6 times the state weekly average wage for 5 quarters. That's a benefit question. Is there an exemption for folks that aren't expected to work that much? So thinking seasonal employees, things like that. The answer to that is no, they are not exempt from the tax. They must continue to pay the tax regardless of whether or not they will ever receive a benefit from this, right? Just like unemployment, we must pay all of our all of our premiums on unemployment. I haven't had an unemployment claim in my business in years, actually ever, I don't think, right? So I pay every year into unemployment just like every other tax, right? I pay my health insurance. I may never get that money back, right? I may never get the full benefit of the tens of thousands of dollars a year I pay in health insurance premiums or and so forth. So this is regardless of whether or not they're going to use it, they must contribute. I have 7 employees residing in Maine, 10 residing in other states. Am I required to register for 78 in Maine? I don't know what that means. 7 for register for 7 in Maine. Yes, you must register. If you have 7 employees in Maine, I need to register for those 7 employees. Yes, every employer, if you have employees in the state of Maine working, you must register for this program, and it applies to the employees working in the state of Maine. Only if you have 15 or more employees working in any 20 weeks in Maine are you required to make the employer contribution, okay? Will the tax show up as a separate tax item on the employee checks? Yes, just in the tax section, it will show just below their main withholding and all the other withholdings. It'll show right up on there. Are owners of the company who take an owner's draw through payroll subject to the tax? Are they included in the employee count? Only W-2 wages would be included in that. It's pretty atypical for folks to only take an owner's draw through payroll. It's a very specific use case, but again, if they were not paying any tax otherwise, they would be excluded from the count and excluded from the tax. So if you're just taking an owner's draw, there's no tax on that. I'm not sure if you answered this already, but is it true that employers with less than 15 employees, the employee still pays, but the employer doesn't? Correct. If you are an employee who works in Maine, regardless of the size of your company, you will contribute 0.5% to this. 1 employee or 500 employee companies, everyone participates. So if you have less than 15 employees, you must still register as the employer. Your employees must still contribute to this plan. Only if you have less than 15 employees, do you have to cover any portion of that. If you have more than 15 employees, you must contribute at least 0.5% in addition to that. What if you're an S Corp that doesn't run payroll? Owner doesn't get paid via this S Corp. I would encourage you to talk to your accountant about that. As an owner of an S Corp, you're required to take payroll. You should talk to your accountant about that. What about shareholder distributions that are outside of payroll? Those are not subject. Shareholder distributions are not subject to this. Single member LLC that has elected to be treated as a corporation but is not running payroll. I assume it has to register with the state but without a contribution. If you are a corporation with no employees, you do not have to register. You only need to register if you are paying employees in the state. Is there a recording available? Yes. As I noted, John is going to get this posted tomorrow. This is all being recorded. We will send out an email to everybody who has signed up for this. and we will send that out in the morning. It'll be posted and available for you. An employee works in Maine, New Hampshire, and Massachusetts. How will this work? As some days they won't work in Maine. So this, again, is treated very similar to unemployment in this situation. So you have a primary work location. Your unemployment is tied to that primary work location. So if their primary work location is Maine, but they do go work in New Hampshire and Massachusetts, they would not be subject to unemployment or PFML if applicable in those other states. Both New Hampshire and Massachusetts have PFML, so they wouldn't be subject to that. But they would potentially be subject to income tax in Massachusetts and New Hampshire. Again, work location is specific in that. So if their primary work location is the state of Maine, and that's where they're paying their unemployment, this is where they're going to pay PFML. And again, if they are working in New Hampshire does not have income tax, so no issues there. If they are working in Massachusetts, you do also need to contribute to Massachusetts income tax if they are working in Massachusetts. You're also going to want to have a conversation with your benefits broker, your workers' comp agent, and so many other things if you have employees working in multiple states, because lots goes into that. And make sure your HR policies are up to date for all the requirements in all these other states. Who pays the health insurance for an employee when they're out on this leave? So that is not, I believe, something that was managed within the rules. And I am going to actually write this one down, Vicky, and get back to you separately, because I believe there is a correlation with federal FMLA here, and I don't want to misspeak. I'm going to ping Dawn, who's our HR consultant extraordinaire, and ask her that question. I believe you are allowed to charge the employee the full amount during a leave, but I want to verify that, and I'll reach out to you offline, okay? Just writing myself a note. Does Paper Trails charge for this in addition to payroll? No, no additional charges are coming. We will continue to handle this just like everything else. Who is responsible for registering this portal on 1/6, and will HR have anything to do with it? The employer is responsible for registering for this portal on January 6th. We are not able to register for that for you. If you have an HR department or an HR person, I don't see why they wouldn't be able to register. However, that is going to mean that their email and their information is being tied to your account. So if they ever leave, that's a consideration that you may need to think about. On the state's webinar, they kind of indicated that the business owner should register, and then you can assign different users within the portal. So if you have an HR person or bookkeeper or something like that, you could register as the employer, the owner, and then you could assign access to an HR person. The only, if you have an HR person, most of our clients are, chief cook, bottle washer, everything else. If you have an HR person, inevitably HR is going to be involved in this because they're going to help administer it. There's payroll considerations. There's all sorts of other things that go along with that. In terms of registering for the portal, that's up to you who you want to do it for you. But we are unable to do it for you. I'm assuming I'm not required to inform my out-of-state employees about this, only Maine employees. Correct, it only applies to Maine employees. If an out-of-state employer has employees working in Maine, does the employee have to pay the 0.5%? Yes, it does. So if you are a Massachusetts employer and you are employing people in the state of Maine, for example, and they are on payroll and working in the state of Maine where their work location is, this is treated just like every other tax. They will pay Maine withholding, they will pay Maine unemployment, they will pay Maine PFML. So this applies to every employee who works in the state of Maine. One of the previous commenters about the folks that work in Maine, Hampshire, Massachusetts, you said primarily in Mass. In that situation, they are going to be subject to the Massachusetts paid family leave. That's their primary work location, Massachusetts tax and so forth. Again, reverse, if they're working in Maine, if they're working in Maine, anytime they're probably gonna have to pay Maine income tax. So lots of considerations for employees working across state lines. We have a full guide on the website under the resources tab for multi-state employer compliance. Lots and lots of considerations about that. Please reach out direct if you have specific questions. I was called away. This may have been answered. Registrations after January 1. Yes, you will be required to register starting January 6th. Luke from the state joined us just now. Breaking news, portal opens January 6th. And we will send out much more information about that when we know a little bit more and get closer. Phew, I'm at the end of my list. Who else has got questions? What else have we got? Not seeing any other burning questions come in here, but certainly we're happy to answer any questions. Our team is well versed in this. Anyone on our team can answer those questions. Please pay attention to the emails we're going to be sending out over the next couple of weeks. We will need you to get registered. That again is something that is going to be very important for you, and definitely something that we need to get you to take care of. And we'll send information on how to do that. Breaking news today, portal opens January 6th, so be on the lookout for that. Otherwise, we will see you soon. Again, this has been recorded. We're going to get it posted online. John will send out a follow-up email in the morning with all the information, but we look forward to getting this going with everybody, and we'll talk to you all very soon.